talking about Drill Baby Drill, the death of Drill Baby Drill, too.
Okay.
I got two topics, two general topics.
All right.
Drill
you guys have a
Baby
good
Drill
weekend?
died?
It died, yes.
I
The world
did have a
doesn't
good
know.
weekend.
The world doesn't know yet, but I'll explain why.
All right. There you go. A little
They
teaser.
probably discussed it on the jet to the Mike Tyson fight with Trump and Elon Musk and the head of Liv, and that was quite a collection of folks on that plane.
It was. Yeah.
Definitely the highlight of the night. Robert F. Kennedy eating some McDonald's. That was talk about something thrust upon you. He did not look happy about having to pose with the toxic food.
Did you guys have a good weekend?
I had a great weekend.
You did? Were you back or were you still with your brothers?
No, I was still on the powdery white sand of the Gulf of Mexico.
Oh, nice. Very
Nice weather?
Yeah, upper 70s and sunny, so it was really nice.
Cool.
Man, that is perfect.
So this will tell you how behind the times I am. Up until this weekend, I don't think I grew up riding a moped, but I hadn't ridden an electric bike, which is essentially a way better moped. And so we went.
Is it though? Is it? I don't know.
It's way better than a moped, but it's not a bicycle. I mean, it's just not.
No, definitely not a bicycle. Yeah.
One of my brothers was like, "Let's go for a long bike ride in the state park," and I was like, "Sounds
We'll
great."
burn off some calories for the brisket.
So he drives us over to this place, and they have all these bicycles. And he's like, "Hey, here's your bike." I was like, "This is not really going for a long bike ride. This is like, yeah, it was
sitting.
It was still
Is
fun.
you're going for a long sit? Yeah.
Yeah.
It's a trip outside, but it's actually even less exercise than walking.
Yeah.
You know what? Those things are amazing, though. I rode those like the e-scooters, which I still think should be banned every place. The little two-wheelers that you ride around and you stand on them.
Yeah.
We rode them through DC with my son. It was so damn much fun that it was just unbelievable. You immediately become that person on the thing. It was a blast. I mean, and DC is just a huge walking. Everything's miles apart, so it couldn't be designed better for it. And you kind of go from being a little shy about it to just holy crap. You know,
Not
we should do
caring.
today? Take some scooters out. You know, it's like
I had the same exact experience. I'm sitting there. I'd been in tons of parks where people zip by on these, and I'm like, oh, how annoying is this?
You just want to hit them with a bag of nickels. Yeah.
Yeah, you're like, can I put a stick in their front wheel? What can I do? That would be... But so then when you get on one, you're like, you're that guy. You're that person. As annoying as possible.
And
But
they seem kind of
really
remarkably stable. No, completely. You walk around and you just think this is a broken ankle and a concussion and just like everything wrong. You see people with their kids kind of strapped up front too. And they're nothing but liability, just liability on the hoof.
I'm doing 25 miles an hour in a state park on a walking trail. It's like not safe. It's like,
but so fun.
Yeah.
It'd
be great if we could just make it so no one else is
Napa, and that was super fun because it was like, but kids, we can either ride real bikes and only go this far, or we can go up the mountain and get e-bikes. I'm gonna go up.
My brother bikes up those mountains up in Napa, and he gets hit by a car.
I mean, we do here, but the problem is we didn't have a lot of time. It was like we have 3 hours to do something, so you have a choice, right? Like, so you can see more of the valley or not. But yeah, it's good biking up there. Good biking where I live. Yeah.
Oh yeah, down there. That is good biking down there.
Yeah.
It makes me want to do one of those Butterfield
Will Robinson.
trips. Yeah,
you know that I got a job as the bike guide for Tuscany with them. Did you know that?
Yeah, so now I think with these e-bikes, I'm definitely going to sign up for that job.
An e-bike. I don't think
we're going to do an e-bike tour of Tuscany.
Oh, that sounds so wrong.
Sounds so great.
It does sound It does sound. It sounds wrong and fun.
Yes, yes. Well, listen, we're here at 7:05 West Coast, 10:05 East Coast. Welcome to Wall Street Beats. I'm Nadine Turman. It is Monday, November 18th. We have Jeff Mackey, David Maris, Robert Marson kicking off a week where we've got obviously NVIDIA, but retail earnings and a lot of other earnings going on. We're going to have Robert start with us today. It sounds like he's got two things to talk about. Robert, what should people know about today?
Well, I saw a posting on Seeking Alpha that Oppenheimer, the research firm, had done, where they analyzed a monthly relative strength indicator (RSI) for the S&P 500, and for those that are uninitiated, which I kind of am anyway in the technical realm, it's just how stocks perform when they go, how much they go up when they're positive versus how much they go down when they're negative, and it calculates the number between 0 and 100, and 70 is supposed to be overbought and 30 is supposed to be oversold. So the contrarian in me wants to say, God damn it, this thing's gone too far, too fast. I'm going to sell it and make money because everybody's participating in this stupidity party where the dumber shit I do, the more money I make. That's what I want to say. And I've wanted to say that for about a year now, maybe a little longer. And yet guys put out research about momentum. And that keeps me from making a big negative bet or selling a significant amount of stock. And in this instance, it's just looking at the S&P 500 when it hits a relative strength indicator of higher than 70. And the table shows that the median period before the stock market peaks is about 12 months. And the median returns is in the mid-teens. So historically, if you look at that table, the market has topped a couple of times, 3 instances about when the RSI hit that. You can see the 3 red ones, a 0, 1, 0 in there. But for the most part, the market keeps going, marching ahead. In that a good rising market begets more buying rather than people that want to, throw their intellect against the market's power and force and try to sell and short and pick a top, which is always very hard to do. So when you combine that with the presidential cycle, which is my next table, which looks at the S&P returns by the 4-year presidential cycle per quarter, we're entering the obviously the first year. We're in the fourth quarter of the fourth year, which is supposed to be a good quarter, typically cyclically. And it's we'll see whether that happens or not. But the first year is next year, so it's not a great year. It's not a great quarter next year in the first quarter, but then there's another rally for maybe 3 to 4 quarters. The fourth quarter is particularly strong in the first year of a presidential cycle. I don't know why that should be true, but historically it's been true. So if the cycles play out the way they have in the past, the conclusion is there should be another 2 or 3 or 4 quarters of a market rally. And it's after a correction in the first quarter next year. So I would say that's not a bad template for how I'm thinking about participation in the equity markets in general. So I would sort of give the market the benefit of the doubt unless and until some fundamental factor really gives everybody a reason to worry about their overvalued stocks, because there's no doubt in my mind that shares are overvalued. But there needs to be a catalyst to sort of turn everybody from buy to sell. And, and a 5% correction isn't going to do that. Maybe NVIDIA missing a quarter by 30% revenues or something like that would do that, or some other geopolitical or macro event that destroyed the economy would definitely be an issue for share valuations up here. But the market could keep grinding out a decent return in the next 12 months, according to those 2 tables that I showed and the historical patterns that they suggest.
Now, Robert, I'm going to push you on this here. Yeah, I want to push you because these are technicals. Everybody's got these charts, right? And so when I think about a market and what you do, you want to be hopefully looking at information that maybe not everybody is understanding or looking at. And not every first year is the same. And this admin is putting in pretty big changes, right? Which could be those types of events, like whether it's just headline or actual like taxes, tariffs, and the like. And so, how do you, when bringing these two charts, incorporate that when those would be those types of events, right? So I always get nervous looking at those kind of charts to say, well, therefore that's going to underpin my thesis when there could be some meaningful changes or outside drivers going on.
All right, that's a very good observation and question. So I would start by saying I believe the algorithms don't have common sense and they follow historical patterns. Okay. And people that have been, and I've been relentless. And even though I'm sort of bearish intellectually for the long term and worried about valuations, I've posted a guy named Ryan Dietrich stuff on our ongoing chart many times, maybe at least 5, 6, 7 times in the last year, about when the market does this for that period of time, this follows. And that moment, and the technicals in this area have been extremely bullish for the last 2 years, especially after the correction in 2022. So all of us that were, forecasting this recession and forecasting a bigger drop than that which happened in 2022 were wrong, and the stock market proceeded to soar in the last 2 years, 50, 60%, some 50%, something like that. So the patterns have still been playing out relative to historical ones, and I think that's because computer algorithms factor into their buying processes. As far as the fundamentals, I hear Trump talking about very bad tariff impositions, and I worry about that as an outlier that could hurt the economy, cause a trade war, and cause higher inflation, higher prices, and all that. And I think that's an issue. But Trump wakes up every morning and the first thing he does is check CNBC for the stock market. He wants to see. He looks at the future. Trump is the single most stock market focused president in the history of the United States, I would say. So I don't know.
So you buying last week? Were you buying into Friday's downturn then? So, did you take advantage of that, or what do you do with this information, personally?
Yeah, well, I would use it to buy any dips in companies that I like, despite that are my stocks dipping. So Ceragon dipped after the quarter. I bought more Ceragon. It was a phenomenal quarter, and the stock is 6 times next year's earnings. So I'm not saying I'm not. If I were bearish, I wouldn't be buying anything. I go into no buy mode when I turn bearish, and I don't buy anything, including the stocks that I like. So, and I'm circling Crocs really hard because we like that here, and it got under 100. And I said to myself, if Crocs got under 100, I would buy that. So I'm close to pulling the trigger on Crocs. And I had it to one of my aerospace stocks that dipped. So yeah, I bought 3 stocks last year. If I were bearish, like the world's going to end bearish because Trump's going to do something stupid with trade, I wouldn't be buying anything. I'd be raising, cash and selling stocks. So I sold winners last year. Last week and the last 2 weeks, and I bought some of my stocks that had pulled in where the businesses did just fine for the third quarter.
All right.
So
anything else? Note? Yeah. What else you got for this week?
It's just I keep hearing and seeing and reading and watching people, drill baby drill phrase, and I read somebody, the administration wants to generate 30% increases in oil production from 13.5 million barrels a day. And that's just crazy. And it's not going to happen. Drill baby drill is dead. You know what I'm saying? Buy baby buy. So what? The last time people did the drill baby drill under Trump 1, the oil production went up a lot, and oil prices cratered, and the differentials widened, meaning the prices you got for U.S. crude and natural gas dropped below the world prices to where the spreads were pretty high versus because we were oversupplying our own markets in a way. And the stocks tanked. The oil execs all got fired. The shareholders revolted and said, guys, we did this growth thing. It doesn't work. If you oversupply a commodity with unit production growth, you shoot yourself in not just the foot, you shoot yourself in the head because the business goes to shit. Who wants to sit around while the oil stocks it'll all drop because we all overproduce. That's not going to happen. And the oil companies.
So what are you saying? What do you think is going to happen? Is just like buy the dip on the news, or what are you advocating for here?
I would be more bullish on oil here at 67 than I was at 77 or 87, and I've actually you buy the energy stocks when oil's low. Now we don't know what low is. It could be 47, and if they drill in 2 years, it'll be 47. So I wouldn't be a fan of that. The oil market's already oversupplied a little. That's why oil is weak. It's not weak because people are worried about future U.S. production. I'd be very surprised if U.S. oil production goes up more than 1 or 2% a year for the next 4 years under Donald Trump's next tenure.
All right. Well, thank you. So, David, I know that you've had some fun back and forth, but we might be saving that for another day with one of our other members. What else you got going on for this week? What are you looking at?
So you were talking about the HIM stuff. Yeah, hopefully we'll talk about that tomorrow. But look, I want to talk about what happened on Friday. So for people who aren't in healthcare, they probably didn't know there was a complete meltdown in pharma and the therapeutics area last week. The XBI, or the biotech index, was down 12.5% last week. That is a big decline, even for a volatile index like this. And this is all around RFK Jr. being HHS secretary. And I do think that he would get confirmed, although it's not a slam dunk. That oversees the FDA and the CDC, and he has called for a lot of different changes. So, a lot of people, when they see a decline like this, they say, okay, well, I'm doubling down on the things that I like. I actually did the opposite, and this may be the consensus trade, but understanding I don't have a healthcare mandate. I'm not managing other people's money, so I don't have to be fully invested. I took my exposure to therapeutics down by about 50%. I didn't hit the panic button. I just went through each company and just brought it all down. Now, for some people, that's very difficult to do because they say, well, I love this company. I really like this company. It's already down a little bit.
Right.
That's not how I think about it. I think about what's going on in the marketplace right now. You have the unknown of RFK Jr. You have a lot of his proposals, most of which I don't think will come to see the light of day. I think changing institutional ways of things that are being done that have been in place for a long time.
Red tape.
Takes forever. Yeah. Getting industry out of the influence game, very, very hard, especially when they donate to a lot of politicians. So I think all of that's hard. But do I think that there's just a rotation going on? Absolutely. I think that people took money out of therapeutics, took it out of biotech and pharma, and said, let's probably go into other areas non-healthcare related. I think that you could actually go to medtech and tools, maybe even generics, things that aren't as tied to some of the things that they're definitely not vaccines. I wouldn't be looking at vaccine companies right now.
Moderna.
So Moderna, Pfizer, Merck, all have had horrible weeks. For a Merck to be down 7% in a week, this is a giant healthcare company. Now, some of them are ticking up a little bit today. And I don't look day to day like that. I think about the next 3 months, 4 months. Am I going to be going into a headwind? And that's what I think I'm going to be doing. And so do I want to be smart and double down and say, okay, this is the time, and 2 years from now, I'm going to look like a genius? And I do think that if people have a 2-year time frame or even a year time frame, this will all work itself out, and innovative companies will still be getting high multiples. But I think that there's a lot of headwind right now. So of the med tech companies I'm looking at, there are things like Medtronic, Quest Diagnostics, that's a lab company, LabCorp, everyone gets their blood tests there. Some CMOs, contract manufacturers like Lonza, Intuitive Surgical. Look at Lilly today, for example, or Novo, both down a lot again. Yeah. And these are high multiple, innovative companies in the head of RFK Jr., who said, people shouldn't even be taking these. So has Lilly or Novo changed in a week? No, but their prices. So those are the things that I don't want to, and I'm short those. So I'm actually slightly happy about it. Never short enough. But so that's kind of what I've done this last week. I know for some people I did talk to 2 other healthcare portfolio managers that manage each over $1 billion this weekend. and they believe that's what's going on too. They're kind of just reallocating from therapeutics. They're going to keep the ones that they have, but kind of smaller positions and more, focus more into devices.
Well, it also sounds like an opportunity. If capital keeps shifting that way over the next few months, then you'll get some really interesting investment opportunities on the long side if it's bottomed out a bit more, if you keep getting hit that way.
And that's the kind of the odds that I'm playing, which is what's the likelihood that I'm going to be at the same spot 3 months from now, price wise, or with much greater clarity of what's going to happen going forward. That definitely will happen in the next 3 or 4 months. Sure. And so maybe it's a slightly higher price point, but I doubt it. I think that sideways would be a win for me here. And I think we're actually going to see, so I'd be underweight therapeutics, which is a rarity for me to say.
Okay. Thank you. And Mackie, I know you've got a big week, and we're not talking NVIDIA. We got Walmart, other big names. So what are you looking at, and how do you think about takeaways from some of the early reporters and the big reporters?
Walmart's the biggest one going, and they're the biggest retailer in the world, biggest one in America by far, 1.5 billion every single day in the United States by themselves, and a one-stop shop for checking out how the consumer's doing, and by extension, how the U.S. economy is doing. And so I want to hear a few things from them. I'm long the stock, and just like everyone else who's talking today, the through line is we're all playing Hamlet because the stock is expensive. I'm long. Yeah. I don't really want to take it off because you don't want to miss the move. But you can't be oblivious to the fact that this thing's up 60% year to date. This is a really big ass company to be up 60% year to date. Yeah. So you get into a situation where if the narrative changes, you're going to feel like an idiot staying long this thing 35 if you're day trading it. So I'm not interested in trading this as much as I am as a tell for the rest of the week. And what I want to see, Nadine, specifically from them, because it bodes well for Christmas, is discretionary expanding. We're 2 quarters into discretionary consumer spend expanding. That's a really good thing because it hadn't happened in years. We pulled forward a lot of demand during the cushy lockdown days when everybody bought, if you're going to buy a beanbag and a stereo, that's when you bought it, and you don't need a new one yet. So to see discretionary picking up at Walmart for a 3rd quarter in a row would be terrific. And in terms of that stock holding up itself, you're going to need to see comp store sales doing well. They need to hit their numbers, but that's less important because what's really driving them on at least kind of the, if you don't want to outthink it as a 4% growing retailer, is that their AI business, they're actually putting it to work right now, and their ad business is expanding. Everyone's trying to imitate that.
Can you go into that? Tell people, what are they doing? If they're not up to speed completely on the Walmart story, what are they doing in AI? What are they doing so that people understand what you're talking about?
They've been really early in automated management. They've been really and things that you can see around their stores. You literally see drones restocking their or not drones, but little R2, D2 type of units out restocking their stores. Walmart's a very aggressive investor in tech. And so they're doing just about everything they can in it. They're expanding their advertising. They're trying to build out their model where they're developing into a club store model, which gives them the cash flows like Costco has. Sam's Club is $100 billion a year retailer. They're doing entirely automated stores. And so they're actually doing the self-check stores. Walmart's so big that they've got this little subdivision, Sam's Club, that's about the size of Target almost. No one even thinks about it because it's a 1/3 of the size or 1/4 of the size or less of Walmart itself. But that's where their learning labs really are. So you can go in there and they're doing the full self-check, which has just been a fantasy. They haven't been able to do self-check stores anywhere. Amazon's tried them on just little bodega bases, and it's been a train wreck. Walmart's pulling that off in Sam's Club. That's huge. Yeah, the amount of potential savings there are just enormous. It's also going to be a tell in terms of what's happening with shrink. I mentioned it last week with Target, but I think it's a point that people are really missing on what's going to drive their margins for Walmart. Because if you take shrink goes down by 0.5%, just a not very much. That's going to just sink straight to the bottom line, and that's going to give them enough margin, enough cash flow to keep that engine growing. And so if you see double-digit growth on their e-commerce, which is just them doing their clubs, their drive and pickup, and you see double-digit growth on their ad business, those are 2 really nice high-margin little operations for them, or at least they will be. They're not making a ton of money in e-commerce, but they aren't ads. They are in some of their other initiatives. And that's going to be just a monster for them because it's in a company this size with margins this bad. You don't need a lot of dial turning on that margin to start justifying this multiple, to justify this move. And so what the bullish argument for this is that really it's become a story where the margins are permanently expanding because they've just become better operators. And that's normally pie in the sky type of stuff, but we're seeing signs of it, and they're actually getting traction on initiatives that they never would have before. E-commerce was a pipe dream for a long time. It's paying off. Advertising the same way. And, just little initiatives like these AI bursts that they're doing throughout their stores, these things where they're personalizing the shopping experience. It's a huge deal. The stores, frankly, I go to urban stores, I go to rural stores because you want to get a good balance in terms of, they look better than I've ever seen them on Walmart. I mean, they're just a better merchant than they ever have been, which is saying something for an almost 70-year-old company that's been public for over 50 years. It's saying something that their stock's up 60%. It's amazing that they're still as relevant as they are. This has been the biggest retailer in the United States since 1989. They took over from Kmart.
And a question for you. So on the call, what is it all about the Q&A, or you're saying same store sales, like there's data that's going to matter for the stock, or is it really about
the same store sales? Everyone's going to plug that in, and so I'm editor's layer.
Okay.
What I want to see the body language, and I want to see them ask a lot about discretionary. I want to see how that split comes in for Walmart. Walmart does about 50% of the revenues from groceries. Biggest grocer on earth by far, not even close. But the margins come from the discretionary side. And so I want to hear them tell me how the consumer's actually behaving. And a little of that's going to be hype, or they're going to say, oh, we're taking more and more of the customers who make more than $100,000 a year. Right. I don't really care. And I kind of think their data is bullshit on that anyway. But what I do believe is that their discretionary departments, when they tell me how TVs sell, that's an actual specific number that they're going to break down to into the Q&A. When they tell me how, those flat panel televisions are really kind of the poster product of the COVID pull forward. They screwed up the supply chain, and Costco, Target, Walmart were drowning in televisions for 4 years. That started to end. Are they selling computers? Are they selling t-shirts? Are they selling apparel? Man, if apparel's good at Walmart on Tuesday, get long some Target, get long some Gap. Gap reports Thursday, and if they're buying t-shirts at Target, they're sure as hell going to be buying them at Gap, and that's a stock that really actually could have some juice.
Can you take that takeaway? Can you take that takeaway that if Target equals Gap, can you make that connection?
I would. Yeah.
Okay.
Actually.
Okay.
Not in all cases, not all the time, and not everyone's going to say that, but this is what I do for a living, and according to my little magic crystal ball, I sure as hell want to hear from the biggest retailer in the world. And if they're selling t-shirts, I bet other companies are as well. And I don't think in this case it's because Walmart sells the cheapest, junkiest crap, because they simply don't anymore. It's not the discount bin that people think it is. And so a lot of times when Walmart, or in the past, when they would have good discretionary spending, people would attribute that to a weak economy. Oh, well, everyone's poor, so they're buying their stuff at Walmart. Not so much anymore. That's not really the case. Again, it's a retailer for everyone. And so where I can create some alpha is understanding that, a t-shirt shopper is a t-shirt shopper. You don't need to replenish your underwear unless you're going to do that. And that's a discretionary spend. And if that's happening there, it's for sure happening at Target, where it's maybe 20% more of their business is dedicated to discretionary than at Walmart.
Right. Okay. Well, perfect. Anything else for today, guys? Well, listen, we're going to wrap it up. It's almost 7:30 here on the West Coast. Thank you so much for joining us on November 18th, 2024. A lot that Mackie's going to have to report here with earnings coming in, especially after tomorrow. When are you on after to talk about Walmart this week, Mackie? When are you
I don't know, man. I'll be back Wednesday for sure. Maybe all Tuesday. Right. Maybe I'll just pop right up.
All right.
We can do something special.
Have a good day, everybody.
Thanks, guys.